Good afternoon, everyone, and thank you for joining us for Q1 FY26 press meet. I am joined here with my esteemed colleagues, Mr. Ranjan and Mr. Sanjay Rudra, both executive directors. Let me begin with a brief backdrop of Q1, which was operating environment for us. As you are aware, on the global front, there have been a lot of uncertainty, which is also posing risks to the growth and particularly the trade side. While on the domestic front, India continues to showcase very strong macroeconomic fundamentals, and so far as the growth projections are concerned, we are expected to remain among the highest growing economy, large economy on the global front. More particularly, the Q1 has been significant because of the front loading of actions from the Reserve Bank of India side. You are aware about the policy repo rate has been cut significantly. And also along with that, in the last policy, there has been announcement for CRR cut of 100 basis points, which will come into phases during the current quarter. And both these announcements, while these are growth inducing for the short term, it has impact on the financials and the margins, which we'll discuss over the course of this conference. So while bank numbers are concerned, on the top line basis, on the deposit growth, we have grown by around 3.7%. And on the advances, we have grown at around 6.8%. But within the advances, if you look at RAM sector growth has been over 10%, supported by strong growth in retail as well as the MSME. And both retail and MSME, you have been noticing that over the last few quarters, we have been showing a better growth on a sequential basis also. CASA ratio, we have been able to maintain at 32.5%. Deposit growth is a little moderate. This is part of the strategy. And you will notice that we have actually shared large quantum of bulk deposits, almost more than 7% of bulk deposits outstanding as of March 25. We have shared in the next 3 months, just to balance and ensure a good trade-off between the top line and the bottom line. Coming to the key financials for the June quarter, bank has announced a net profit of 4,116 crore, which is annualized growth rate of close to 12%. And we have been guiding and we continue to report return on assets over 1%. For the June quarter, it is 1.1%, which is again 5 basis point higher than the numbers year ago. Return on equity quite strong, around 15.15%. There has been, as I said, some moderation in the net interest margin during the quarter compared to the March quarter. There is moderation of around 11 basis point. And as we discussed last quarter meeting also, that it is expected that around 20-25 basis point moderation is expected during the full year in the margins, given the rate cut and the differential pass through on the liability and the asset side of the balance sheet. On the asset quality and the capital adequacy ratio, bank continues to remain very strong, both on the gross NPA and the net NPA, their ratios. There is a marginal decline. Provision cover ratio has further increased by 116 basis point. Credit cost continues to remain low. We have brought it down to around 47 basis point. As well as the delinquency ratio, this quarter we have reported less than 1%, which is again an improvement over the March quarter as well as the year ago. We have been guiding, and this quarter also we have reported total gross recoveries higher than the slippages during the quarter, and we expect this trend to continue. Amongst other developments, you will be aware that there is a PSB reform program running over the last many years under the name of EASE program, and the last EASE program of EASE 7.0, Union Bank of India was awarded the third best rank amongst all the public sector banks, and it's a very comprehensive program covering the growth, asset liability, asset quality, digital, customer service. And within that EASE 7 program, there are 5 broad themes, and under 3 themes, Union Bank of India was ranked in the top 3 banks. Another development during the quarter is about announcement by Government of India about amalgamation of regional rural banks. In the state of Andhra Pradesh, 4 existing regional rural banks were amalgamated into one RRB, which is now known as Andhra Pradesh Gramin Bank, and Union Bank is a sponsored bank for that. During the quarter also, we have launched several digital initiatives in a small closed user group, particularly the digital personal loan, digital vehicle loan, and the NPS onboarding. and we continue to see good traction and good addition in our customer base for the mobile banking as well as internet banking. Way forward, obviously, as I said, that there are many developing things. Rate pass-through is happening, but complete pass-through is yet to happen, and that is going to have impact on the margins and the financials. So as we navigate through this, we'll be guiding you through our expected numbers for the quarter. With this, I'll take a pause and we'll open the floor for the interaction. Thank you.
And even other income, both have shrunk YoY basis. Do we expect similar thing in the quarter two? And on that backdrop, what kind of a guidance we can keep, especially on the credit growth, because credit is also much below the industry average of 10 to 11%. We're somewhere close to 6.7, 6.8.
So as I said, 6.8 is the top line rate growth. And I also said that there is a trade-off between the top line and the bottom line. Obviously, when the interest rates are coming down, you are aware that close to 90% of the bank's loan book is on the floating, 48% is on the EBLR, and around 42% is in MCLR. But the pass-through is almost immediate. While on the deposit side, while we have cut the rate, pass-through will take time. And therefore, June quarter, we have seen a reduction of around 11 basis points in the margin. Maybe in the September quarter also, something is expected. Overall, I think first two quarters, we'll see the moderation in the margin. After that, we should be able to hold on at that level. Overall credit growth, again, it's a matter of trade-off between the margin and the top line. And but if you look at the RAM sector growth is quite good in the double digit. Overall RAM is over 10%. Retail is in the 20s. Even MSME is now around 17%. Last quarter, if you look at, it was 12.5% YoY growth, and this quarter it is around 17%. So all these four sectors we are focusing, and we are going on that.
So on the credit side, what kind of guidance we can expect for the entire year? If you can.
Yeah, so we are not giving the guidance, as I just now said, that we are also evaluating the situation and we'll navigate through that. But I can, some directionally I can say that RAM sector growth will continue to report in the double digit in the range of maybe 10 to 12%.
And on the deposit side, if you have completed your reworking, because you said there is your shed, and that's how there is.
So deposit side, we should also look at the liquidity and the credit deposit. So you notice that while the top line deposit growth looks quite low, around 3.5% kind of thing, but within that, as I said, that bulk deposits we have shed. While if you look at the retail term deposit, we have grown close to 12% YoY in the June quarter. And given that our CD ratio is quite comfortable, moderate, and we have sufficient liquidity available to grow, we'll take all of the deposit growth as the credit picks up. It has always been 55-45. I think this quarter it is 56-44.
Can you come again?
56% is the RAM portfolio,
Yeah.
and around 44% would be the corporate portfolio.
Yeah. Has there been any change in this composition in the last few quarters?
No, it has been remaining almost stable at 55-45. 1% here and there, quarter to quarter, depending on the scenario of that quarter it happens.
Yeah.
But 55-45 is our guidance, and we have been around that.
And corporate loan growth, how is it actually? Because you have not mentioned it in the presentation. So we just wanted to get an idea. How is the corporate loan growth and what is the outlook for it?
See, we still corporate loan corporate growth. Our capex in the corporate sector is still not very. It is not much growth. It's not very flat. We are able to see that we have grown a modest of year on year around 3%. Again, the rate of interest plays a major important role in the corporate sector growth. If we want to grow, we have to compromise on the bottom line. So we are taking a conscious call saying that we will be taking which at least provides some margin to the bank. So that is what we are looking at that. So corporate growth is around 3% year on year, but quarter on quarter it has been reduced. We are shed away some corporates.
And CASA growth seems to be a little bit of an issue actually. It's coming down. So as a proportion of overall deposits. So what steps are you taking to actually bump it up?
Yeah, so CASA growth for the industry, for quite some time, last couple of years, it has been a challenge. One was that the rate differential was quite high. Now that rate differential is also getting corrected. At the same time, if I look at from Union Bank of India perspective, we are doing more and more to reach out to the customers across the country, as well as increase the engagement with the customers. So today we have close to 1,250 relationship managers who have been mapped to the select customers across the branches, and on a continuous basis they are engaging with these customers for further product deepening, so that the balance in the CASA accounts are also higher. Similarly, we have also identified and continue to identify on a continuous basis the customers where the average balances are on a depleting trend. So those customers also are being contacted for the new services, so that we can again get back the balances in those accounts. Similarly, on the current account side, we are quite aggressive and reaching out. And digital services, we are deepening so that more and more customers use our digital banking services, and the stickiness of the customer, average balance in those accounts are maintained.
With regard to the government stake coming down and then the stake raise, is there any plan, though you might have taken the board and those, so what is the status of the plan?
So, last year we did a QIP raise to increase the minimum public shareholding, which led to government holding coming just below 75%. As of now, for this year also, we have announced the tentative approval of the board for the capital raise, and we'll be going to the shareholders for the approval. And today, if you look at our capital adequacy ratio, it's quite strong, 18.3 total and 15.3 the common equity capital. So quite sufficient to grow at a kind of 12-15% rate over the next 2-3 years. But depending on the market scenario, we'll continue to evaluate whether we should go to the market and what point of time.
As far as the tier 1 and tier 2, which any of the redemptions or maturities are coming in this year?
Yeah, there are about there are maturities around 6,000. But 6,000 crores.
6,000 crores combined, 81 and so you will look at the replacement.
We will see, like sir mentioned, our capital adequacy is very strong.
That's
at
right.
18.3. So we will look at market opportunities as and when there is an opportunity to raise equity, we will look at it. But currently there is no.
6,000 crores. Correct.
Hi, I'm Nisula from Money Control. So just want a clarification. You said 6,000 crores is coming for the mature debts for the next quarter or throughout the 3 quarters?
Throughout the year.
Full year.
Full year. Okay. And sir, one more thing. You said about the pass-through of the rate cut. So how much has been passed in this quarter, and what is the plan for the next few quarters? How much rates will be passed just to predict your names?
See, as I said, 48% of the loan portfolio is EBLR linked. So that pass-through is immediate. And 42% is MCLR linked. I think MCLR also with the recent change, almost 25 basis points we have already passed through. So that is on the asset side. On the liability side also, we have reduced the rate of deposits, but deposits because of their maturity profile, the pass-through will take some time.
So you also said that in the next quarter that some maturities are going to happen and that the rates will get changed. So how much reduction will we expect on that?
So deposits roughly around.
And what is the average yield on the deposit which is coming for the maturity?
I think around 20 to 25% deposits mature
Yeah, so
every
if you
quarter.
look at our maturity rate, about 40% mature in 0 to 6 months, and other 40% mature in 6 months to 1 year. So we will be repricing as and when they come up for maturity.
And I think the point that you are asking, what is the weighted average cost of the maturing deposits vis-a-vis the new deposits, I think there should be a differential of around 50 basis points, 25 to 50 basis points positively. 60 basis.
60.
But that will take time to have impact on the market.
The benefits will flow incrementally.
Yes.
Yeah.
Hello, yeah. Hi, sir. This is Vishali from Informist Media. Just wanted to know, there is a sharp fall in agricultural loan. So, is there some sort of stress in priority sector lending?
So agriculture loan fall is that, let me explain it properly. If you look at last 1 year, there have been several guidelines from Reserve Bank of India. So, like some of the loans which were classified earlier as agriculture loans, in particular the gold loans, now they are not classified. Although now again there is a change in the guideline, in the recent guideline which have come, and we are reviewing that. So that is a key factor. Otherwise, if I look at the core agriculture sector, that is continuing to grow at a good rate. This decline in the overall top line agriculture is mainly because of the gold loans not being made agriculture.
Thank you, sir.
Can you give us a glimpse into your unsecured portfolio versus between the retail? How much is unsecured, secured, and has there been any moderation in the unsecured?
So total unsecured portfolio is around 12,500 crores, which also includes the credit card. And it has been stable rather in June quarter YOY there is a decline of around 3% in the unsecured portfolio. And that has been the trend over the last 4-5 quarters, that either it has been stable or little bit degrowth is there.
Yeah.
Primarily the profit has increased on account of the lower provision requirement. Because if you see we have already made the provisions to the extent of 95% over a period of time. And secondly, the slippage in this quarter was also very restricted. It was around 2,300 crore, and the provision which we have made earlier is adequate enough to take care of. And there was no additional provision. Aging provision was very limited. That is why the provision requirement has come down, and our net profit is slightly higher. So 12% growth we were able to register.
Restructuring or whatever that is remaining, any of the restructuring proposals are there that might be the pipeline?
No, there is no such proposals in pipeline as on date.
Some MSME will be there.
And that's a small amount of, there is no major risk on the restructuring trade.
What is the status on that government-owned telecom company? Because you don't want to name it, so I'll describe.
The telecom side, we have made adequate provisions, which is required for that account. Government, the discussion is going on. If the resolution, we are hopeful that this quarter, if the resolution comes, it will be beneficial for the bank.
There was
We
an
are
issue
waiting
of,
for the resolution.
sorry, there was the issue of haircut or through IBC or how? Is that something? What exactly is the lender's stand on that?
It's a government account. It will be mutually, amicably settled. Numbers will come, and we are not going with what is haircut will happen from the government side. But whatever the IRAC norm is asking us to take care of the provision requirement, that much provision we are doing. So that will take care of any future haircut if it required.
You have already done the 100% provision or some balance is required? Still?
No, adequate provision we have made as per the IRAC requirement, because it's still in substandard category.
Yes, sorry.
So we have made the adequate provision.
So how hopeful are you of a pickup in credit because of the rate cuts that you have done actually? Yeah.
Rate cut?
No, see, credit pickup is nothing to do with actually rates. It is only one of the factors. It is not the only factor, because in any credit cycle, if you are looking at any project cycle, you look at it, there will be a rate upward is there and the downward cycle will be coming on that. Mostly it is on the geopolitical things which is presently there. We find that people are just waiting and watching before they are going for any project capacity addition or new projects. So we hope that once the geopolitical tension, including the US tariff tensions are being settled, I think there will be a good scope for the credit.
And what is the kind of loan pipeline, corporate loan pipeline you have built up, and do you see any kind of delays in the drawdowns actually?
No, projects which we are given already, if you are looking at it, around 50,000 crores is already documentation has completed and is going for disbursement is going on. So those projects are happening in the time-bound manner. There is no issue out of that. Only thing is, we also have around 20,000 crores in the pipeline, which we are under the various stages of consideration. It is yet to be sanctioned, but it is in the various stages of consideration. So we find a lot of demand is coming from few sectors only, from roads, some power, and some of the steel manufacturing. So, and renewables, as you see that the renewables are coming, and the GCC, that is Global Capacity Centers, where you have office space, we find demands are happening. But overall demand has to pick up, and we are expecting that with things settling down, I think there will be more growth on the credit.
And how about electric vehicle financing? How big are you into it actually? Because there is a lot of noise about electric vehicles.
Yeah.
So just wanted to get an idea as to how much of your portfolio comprises electric vehicles and what is the outlook for that?
Yeah, see, electric vehicle, it is coming, if you're looking at the portfolio wise, if you are saying that now we are given in the retail only, electric vehicles are being given. Now there are 2 or 3 manufacturing where we have sanctions of around 1,500 to 2,000 crores already we have given on the electric vehicle manufacturing. It is one of the very important sector which is going to be there in the country. We will be taking a fair call.
I have a question. Considering the tariff war around the globe, how you are analyzing your students' loan segment? Because US has so many of issues with the students, and even in Europe there are so many restrictions. There are a lot of students who have taken a education loan. So how you are, analyzing this portfolio?
This does not have anything to do with the tariff wars actually. And this is because of some of the policy changes which the new administration has brought in. We have been monitoring it. Actually, what we are doing, we have been closely monitoring the things. Mostly, see, these students already are qualified here for working. It is not that they are going for that only, they are going for higher studies only, people are going there. So we don't find immediately any stress on that. We are not finding much on things. But this year we may, because now is a season actually, we may find that there will be a demand may be less than the normal things. That is what we are expecting more.
Europe, in fact, this education loan demand is growing up. But US, it may come now. But as far as the portfolio is concerned, till date we don't find any stress in the portfolio. Because what is being reported and spoken about, it may not really, it is happening at US also. The education is going on, and some of the court decisions are also in favor of the students only.
There are mentioned over 2 years. so it's about 2,700 approximately this year and another 3,000 the next year. But thank you as always for your support, and we look forward to seeing you again at the next press conference.
Yeah, you have.
Yeah, just one thing I missed that. What was the credit growth guidance FY26?
No, we have not given any guidance for this year.
Okay. And for the NIM, sir?
NIM also we have not given guidance, but directionally we have said that there is already 11 basis point moderation in Q1, and overall maybe 20 to 25 basis point of moderation is expected for FY26.
Thank you so much.
Thank you.